I think both speakers were very good, but Peter Thornhill, was it? Peter Thornhill, I mean, he's right when he talks about people's confidence in share investment or their concerns in share investment.
The stock market has two primary functions. The first is to enable companies to raise capital. The second primary function is to provide a mechanism for you and I to exchange for value ownership of those productive enterprises. I would suggest to you that the stock market carries on in a reasonably rational manner those two primary functions: capital raising for industry and enabling you and I to exchange for ownership of those businesses. Now, the problem that I think people don't realise is the stock market is perfectly rational. The problem are the people associated with it. Do you understand if I could get rid of people, we wouldn't have the issues we've got today?
The most recent data on the global scene and putting in that in perspective, the European thing and how that's likely to impact our market.
So there's this what I call a money go round. You know, countries can't borrow money in markets, so the rest of Europe sets up other bodies, they go and borrow the money in the markets and they lend it to the countries that can't borrow the money. And the big issue is, of course, you've got to get interest rates down to a sustainable level to allow countries to get on top of their debt problems. Some countries like Ireland have basically taken the medicine and have got on with the reform of their fiscal policy and their budget deficit, and the markets are now rewarding them for that. And other countries like Greece have kind of done everything but get on with the job.
Also probably how well Australia is positioned versus others. When you're in the forest, you don't always appreciate the bigger picture, and Australia is very well positioned.
So the Australian economy, compared to just about any other economy you'd want to name, has done particularly well. So this is a chart actually put together by the Reserve Bank and used by the Reserve Bank Governor. So what it is we start in 1995 for both charts, and this is real economic growth, and this one's real economic growth per capita, per person. And you can see over that time the Australian economy has outperformed all the other economies we like to compare ourselves to.
Well, seeing as I'm not exactly the financial savvy half of the couple, I think I found the best thing that both presenters did was it was clear, it was the visual aids that both people used were excellent. And
my golden rules of wealth creation, a bit pathetic, but I was reminded of these. I had assumed that these were accepted tenets with the public, but I've discovered they're not. The two rules are spend less than you earn, borrow less than you can afford. I want you to consider over the last 4 to 5 years the governments, the corporations and the individuals that have been incinerated or are about to be. What was it that which of those two or both did they break?
I think a reinforcement of the work that's been done over the years and the way my portfolio has been handled.
Well, I think as always, one of the key things we value with Modoras is the access to facts and figures and market realities. And this is data and information from independents. That's not the Modoras view, it's the market view and the current view. And that's a really important context to us, that the propositions that Modoras are pitching to us are done so in the context of the greater economic environment of the day.
It's a value to everyone, I think, a night like this. If you have money to invest or if you're worried about the future and all the rest of it, then some of the things that are said just sink in, make you a little bit more relaxed, or leave you with questions to ask Peter and Tony at some future time.
I think that the message that rang clear to me tonight was that knowledge is power, and it's never too late to start looking into your financial future.
So a lot of talk recently about, is the mining boom over? Now, I don't even understand what that means, because I don't think we've had a mining boom. What we've had is this progressive change in the nature of the economy. The re-emergence of China and the demand for resources and commodities has seen a massive increase in prices, and Australian companies met that increase in prices by increasing their capital spending to expand the supply to service that demand. And the prices have come off a bit, but the capital spending is still accelerating. So this is a chart of private sector capital spending. The red is the mining sector, and the blue is the entire rest of the economy. So look at the change over this 20 years or so, where mining was a fraction of the total rest of the economy to, outperforming massively. So this chart goes up to 2013, and the expectation is the peak in mining capex will be 2014. So you've heard a lot over the last couple of weeks about, the peak in mining capex. It's all going to come to an end and it'll fall in a big hole. No pun intended. But we are still expecting that many of these projects will still happen up to 2014, but then it will trail off. So the economy will need to find another source of growth beyond 2014.
And because we are the normal working people, we don't know the ins and outs, and that's why we come in here to Peter and Tony, and they give us the information we need so we can invest for our future.
I'd say that it's a very worthwhile evening and that they will learn a lot, and I'm sure that they will get a lot of value out of the evening.
I think I would primarily say these are calibre presentations from nationally, if not internationally recognised speakers from the best houses that the country has to offer. And you're going to learn something that's not the view of Modoras, but a greater context, facts and figures based thing, and don't miss the opportunity.
The 1987 crash, perception? Put your hand up if you can show me the crash. Watch carefully, I'll do it again. Where's the 1987 crash? There wasn't one. For those that have forgotten, don't remember, or weren't paying any attention anyway, the numbers for that period that I've got there, if you double 1, you have 2. If you halve 2, you have 1. Between October 86 and October 87, the Australian share market rose 100%. It doubled in 12 months. It subsequently corrected by 50%, which took it right back to where it started. My question is this: in that 12-month period, which was the rational event? The stock market rising 100% or correcting by 50%? Before you consider, let me ask you another question. Is it feasible that the value of every Australian company could double in 12 months? There's not a snowball's chance in hell of that happening. If the value of Australian companies didn't double, what did? The price of Australian companies. You're aware that most people know the price of everything and the value of nothing? And because no one bothers to read annual reports or anything, what do most people use in their minds as the proxy for value? Price. Do you understand why they make a horlicks of what they're doing?
Well, we've actually been with Modoras now for about a year, and we are finding it great to be with such an approachable team of people. And as earlier, I think someone said tonight, that it's great client care that Modoras has, and we feel like a little family there, so that's why we like being with you guys.
I would say about 15, 18 years with them, yeah.
When we introduce ourselves, that's our challenge of what we say, because achieving more is always possible, and looking at that every facet of the client's assets and their estate planning protection, and then we believe achieving more is always possible.
I think it's about 10 to 12 years.
Just working out 12 years, so since I first met Peter.
We usually say we start where most people finish. So that's a challenge to ourselves, and we pride on that.
We've been connected with Peter and the Modoras family only for the last couple of years. In fact, I was introduced through a women's networking group on one of the lecture series, the 7 Deadly Sins for Women Financially. And from then I was highly interested because the topic was so interesting. And of the 7 deadly sins, I think I was a victim of multiples. And from there, I really was interested to see, what's on offer. And since then, we have become very happy clients.
The future is really bright for the next 10 years. I'm looking forward to that. And I believe the future of financial planning and helping all these Australian families to achieve the best for themselves, and that is important from our point of view, and that's what we're trying to do.